Welcome to the Sykes & Company PA video blog.
Estimated tax payments are taxes that the IRS requires the taxpayer to pay throughout the year. So for those entities that are pass-through type entities for taxation, including S corporation, partnerships, Schedule Cs, the IRS says you got to pay in your taxes throughout the year, not just on April 15th. So that's what an estimated tax payment is. It's paying that tax throughout the year periodically, so you can become in compliance with the laws. Failure to do so may result in underpayment penalties. Mistakes we commonly see with pharmacies with estimated taxes is some of them don't pay the estimates at all, and then they're stuck with a large bill on April 15th plus an underpayment penalty and interest. That's a common mistake. Another mistake we routinely see is those estimated taxes are not properly estimated. Your CPA should handle that, and that they're not reviewed quarterly. So you have 4 payments to make a year, according to the IRS. You can make them anytime you want. The IRS will take your money anytime, but there's 4 due dates: April, June 15th, September 15th, and January 15th of the following year. And so what we routinely see is that pharmacies either aren't paying enough or they're paying every quarter when they don't need to be. And so if you're paying an extra quarter or two of estimated taxes, say $15,000, $20,000, $50,000, that's money, that's cash flow in your pharmacy that you're probably taking out of your pharmacy that could be staying in the bank account, improving your ratios, improving your cash flow when it's not necessary. So you got to routinely, I should say, check those estimates each quarter. So when you're faced with estimated taxes and you want to be proactive on that front, tax planning is a key metric you need to be doing each year. And the tax planning is going to identify how your original estimates were set up, whether they're still accurate, whether they need to be adjusted. Because again, this is all coming down to the cash flow in the pharmacy, and you need to be staying on top of this because there's no point paying $50,000 a quarter to the IRS if it's not necessary. And that also goes for the states as well. This applies to the states. So tax planning is going to be your gateway to overviewing how you've done throughout the year. Of course, you got to have those sound fundamentals in place with numbers each and every month so you can proactively plan accordingly for the year. But in about third and fourth quarter, you're looking at tax plan projections, what your tax liability is going to be, also adding in your strategies you may be considering with your CPA to mitigate that tax. And then you can adjust those third and fourth quarter tax estimates accordingly, whether you need to pay less, whether you don't need to pay them at all. So tax planning is a very key part of that process, and it's all going to come down to those fundamental numbers. Hopefully you have that in place. It's going to be required. And then once you've got that, you're going to see your cash flow hopefully improve because you're staying on top of it, plus you're mitigating the tax during the tax planning process. Tax refund on the grand scheme of things is great on April 15th. However, you do need to be mindful that that is an interest-free loan you're giving to the government, and that's money that you're lending, but you're not getting anything in return. So the overall goal is to break even, and that's really where tax planning is going to come into play. So you're not giving out any more money than you absolutely have to. So be mindful of that when you're thinking of refunds. The goal is not just a large refund; it's about managing this process so you about break even, and that's what you're shooting for. And again, I just want to mention that cash flow is a very key concern in pharmacies. And a lot of folks don't consider estimated tax payments as a part of that process, which is the government is your silent partner. So when you are doing any kind of cash flow planning for your pharmacy, you have to be aware that the government is a partner there. They're going to be requiring taxes to be paid. So you do have to incorporate that into your cash flow model. And of course, Sykes & Company can help you do that by staying on top of your numbers, getting the fundamentals in place, and of course, proactive tax plannings throughout the year. So feel free to reach out to us at any time. We'll be happy to help you.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.